Real GDP, or real gross domestic product, is obviously challenging to measure accurately, whether using the value added accounting approach or the income based route to calculate the comparative GDI, or gross domestic income of an economy. The Bureau of Economic Analysis, or BEA, will end up revising GDP estimates for years, and various methodological changes could have implications for GDP estimates decades ago. The tools of the trade, while imprecise, have gone better over time. But as time has moved on, so has technology. And some sectors that exist today, like financial technology and social media, are not only new but incredibly difficult to measure in terms of output. Even standard service industries like banking and healthcare are hard to quantify in terms of their output. Just the idea of measuring the output of an economy comes with its own problems, if we're honest. What is output? Is dinner my wife cooked last night part of the final output of the economy, or does her effort add no value to the vegetables we purchased? If so, then there are serious implications from us not accounting for the value of homemaking and informal childcare, especially since such household tasks at the time spent on them are disproportionately delegated to women of color globally. But this really just points to the inability of GDP and other measures of output to account for transactions outside of legal markets. Few are accounting for the value of you babysitting your nephew while your sister attends a job interview, even though arguably value was added. Similarly, few are accounting for the value being added every day in the open air drug markets of Washington Heights in New York City or other major urban centers across the country. But the dealers working in these neighborhoods, for better or for worse, are adding value to whatever product they're selling and spending the proceeds from transactions coming from such a market. Alright, maybe you consider the sale of Schedule 1 controlled substances to be at least ethically dubious. That gets to the other problem with GDP. It doesn't ignore the bads of our economy. If you consider dealing drugs to be a bad thing, fortunately for you, it happens in an illegal market that doesn't count toward GDP, so we have little incentive to expand it as a way to grow the economy. But all that personal protective equipment we just bought to get through a years-long pandemic, or the grant dollars poured into researching SARS-CoV-2 and the vaccine for COVID-19, all of that does count towards GDP, regardless of the fact that it reflects a deterioration of our society and environment. Same for all the money we spend on treatments for chronic diseases of affluence like heart disease and diabetes, and the money we spend on homelessness. To the extent that it's all spending that could have been avoided, it's adding to GDP, regardless of how much it reflects what is bad about our economy. Some economies, though, have tried to account for at least some of this bad. Ireland, for example, adopted a measure of GDP that adjusts for the influence of parked cash in businesses only seeking out tax shelter rather than contributing to economic prosperity. But some might respond back that all of that potential bad hardly matters. Multiple surveys have suggested that higher per capita income is associated with positive life satisfaction responses among residents. But happiness can be subjective and hard to measure even before drawing a relationship between it and another variable. We don't have a direct mechanism to explain why higher per capita GDP could cause happiness, mostly because inequality complicates the connection between per capita real GDP and households. And it's clear that some of the activities that do contribute to GDP could be directly or indirectly deleterious to well-being and happiness. One thing is for certain. There's no part of GDP that accounts for leisure, even though it's almost universally accepted that an economy that can produce more output using less resources is more efficient. But it's no surprise that a tool inappropriate for measuring the contributions of millions to their families and communities across the globe would also fail to reward us for our ability to be productive while taking back our time.